the IRS doesn't actually want you to understand how the tax code works because there is a way and you can use your LLC not only to protect your assets, but to actually pay less in taxes in the process. So in today's video, I'm going to show you guys 3 ways that the top 1% of business owners and the rich are using the tax code to their advantage. Now, as I said, it really comes down to using LLCs to protect your assets and to even pay less in taxes. Now, there are 3 ways that I like all of our clients to do it, right? Number 1, you want to use your LLC to protect your assets. Number 2, you want to pay yourself strategically and the right way. And number 3, the kicker, you want to lower your taxes using your LLC in the right way. Now, I'll explain each of those 3 in detail so that by the end of this video, you'll be able to protect your wealth just like the rich. But stay tuned to the end because this entire process, it really hinges on one thing that I'll show you guys at the very end of this video. Now, for those of you that don't know who I am, my name is JT, and I've spent the last decade saving business owners, just like yourselves who are watching this video, thousands of dollars in taxes completely legally by using the tax code that most CPAs just simply don't explain to their clients. Now, if you want to work with us directly and make sure that you're paying the least amount in taxes possible, all by the book, by the way, click the link in the description of this video to apply to work with us. Now, let's get into today's video. Now, the first thing that the rich do correct, or in the best way, is that they think of their LLC as a way to protect themselves from their business or their business from themselves. Again, the main purpose, it really is in the name, limited liability corporation or company. You don't open an LLC and the tax savings just rain in from the sky, right? Here's the concept. Your LLC, it simply separates your business risk from your personal risk or your personal assets. And again, that protection, it only works if you treat it like a real business. Now, what do I mean by a real business? Here are 4 points that I really like to hammer home, right? Number 1, you want to have a separate business bank account. Now, what that means is all of us have a business account in our name, or a bank account in our name, or at least I would hope so. I have one in my name, JT Pells. I use Capital One. However, my business account, I use a bank called Relay. They are completely separate. The next thing is that you want to have contracts, agreements, and leases, not in your name, but in your LLC's name. Think about the last time that you applied for a job, whether it was at McDonald's or a Fortune 500 company, right? You had a contract between yourself and your employer. It wasn't between the name of your manager and yourself, right? You had contracts. So the same thing here. You want to have contracts, leases, agreements in your LLC's name. Now, number 3, it kind of goes back to number 1 is you don't mix personal and business expenses. Now, what do I mean by that? Let's say that you have a business and you wanted to go to McDonald's to buy lunch to take out your clients. What if the cashier from behind, instead of giving you a credit card reader or taking cash, they handed you a cell phone and said, hey, just Venmo me, I'll make sure I pay McDonald's. You would look at them like they're fucking crazy. The same thing here. When you are a business, you have a business bank account. And if you get paid for providing business services, that money goes into your business account. It does not go into your Venmo account and then in your personal one. Same thing with expenses. You want to pay your personal expenses from your personal account and your business expenses from your business account. Same thing. Now, number 4 kind of goes back into number 1 a little bit, or number 2, is you want to have proper records and documentation. Now, what does that mean? It goes with having contracts, whether that's employers that you're working with, other businesses, B2B business that you're working with, and documentation. You want to have agreements, receipts, invoices, credit card detail, right? Bank statements. You want to make sure that you're having all of that. But I can tell you, without a shadow of a doubt, if all of you went to your employer and you saw that they were taking Venmo and doing all this crazy shit, you would probably think twice about working with them. Same thing here. Now, you might be asked, what is the risk of doing it wrong? Why do I have to do all this stuff? Because you can have what's called piercing the corporate veil, meaning that your personal assets become fair game in a lawsuit. Right? Let's look at this example, right? Let's look at a construction business owner, right? Let's say they had a job site claim, meaning that like one of their employees got hurt or fell down or anything happened, something crazy happened, right? Now, if you are treating your business like an ATM, meaning that you're taking a little bit of Venmo here, you're paying for your wife's manicure here, and then you're paying for some employees, it's all a hodgepodge of stuff. what can happen is insurance, contracts, and payments, they can look at that and say, well, this actually doesn't look like a business. So instead of this LLC protecting you, now everything's opened up. However, if you're doing everything correct, like this example here, you would be protected, right? You want to make sure that you are treating your business like an actual business. The analogy that I like to make is your LLC is like a seatbelt. It doesn't really feel necessary until you need it because just driving in a car, if you don't wear your seatbelt, not a big deal if you don't get in a crash. But when you do get in a crash, you want to make sure you have it on. You can't reverse engineer and say, oh, after the crash, put on my seatbelt. Same thing here. Make sure that you stay ready so you don't have to get ready. Now, the second thing that the rich and other good business owners do is you use your LLC, or not necessarily use it, but you pay yourself correctly from your LLC, right? Now, what I mean by that is the rich and good business owners, they do not take money randomly. They actually pay themselves intentionally, right? The concept is transfer money the right way. Now, what I tell most of our business owners to do is you want to set a consistent pay schedule, right? There is no such thing as random transfers, meaning like, let's say like you go to the ATM, right? Kind of like that Chris Rock joke. Whenever I go to the ATM, I just kind of go when I need it. Maybe I need it on a Monday. Maybe I need it on Tuesday. Maybe I don't need it for 3 weeks, right? I just kind of go whenever I want. However, in business, you want to pay yourselves on a consistent schedule. Now, this is going to get covered in a little bit later in the video, but you want to make sure you're doing it the right way. There are owner's draws, which means you transfer over profits, or you can take a combination of payroll and draws or distributions. That's for an S Corp, which stay tuned for a few more minutes because we'll get into exactly how you do that. Now, another key practice is you want to keep personal personal and business business or separate, right? We all have personal mortgages. We all have rent. We all have a personal car payment. You make those payments from your personal account. You do not use your business funds. You transfer the business funds to your personal account, and then you spend out of your personal account, not the other way around. And one way to make it simple is automate your transfers. Make it simple and repeatable. For example, all of our clients that we work with on a yearly basis, we tell them you transfer money on the 15th and the 30th. Again, automatic, make it simple, and it's repeatable. One less decision you have to make during the day. Now, let's look at an example of a contractor, right? The first sentence here, that's a less than ideal, or my new favorite word, suboptimal. Let's say you are making $400,000 and you pull cash whenever you want it. Instead, we want to get on that fixed owner schedule every 2 weeks or the 15th and the 30th, right? You want to do it that way because, again, you want to treat it like a business. You don't pay your employees whenever they ask you. You pay them every 1st and the 15th, every 2 weeks, 15th and 30th, right? There is a schedule when employees get paid. Now, when you do this, it does a few things, right? Number one, your cash flow is stable. It's not like, oh, $100 here, $10,000 there. No, it's stable. You know when money's coming out. Next, the books are clean. And most importantly, tax time is easy. You want to make it easy for your accountant, but most importantly yourself. You don't want to be stressing. Now, the takeaway from this is you cannot run your business like it's an ATM machine and expect it to grow. Let's even set aside taxes, right? You can't treat yourself the way. You have to be organized. You have to know with what you're doing. And number two, you want to pay yourself with intention. When you do that, you have control, not chaos. And I can tell you, all the clients who are shocked at how much they pay in taxes, it's because they are not organized financially. It is not a shock when that happens. Now, number three that I want to talk about, and again, when I talked in the beginning of the video, what hinges on it? Number one, you have to be using your LLC in the correct way. Number two, paying yourself the right way. But now let's bring it all home. You can actually use your LLC to lower your taxes, right? Now, what do I mean by that? We're going to get into it a little bit here, as you see on the screen. But again, the LLC in and of itself doesn't save you taxes. It's how you use it, right? Think of it like a golfer. For those of you guys that are golf fans, if I went out and bought Tiger Woods' golf clubs, and me never golfing, or not regularly at least, I do not inherently become Tiger Woods, right? I have to know what I'm doing. Same thing here. Donald Trump has LLCs, but just because you have an LLC in New York like he does not mean that you're going to use it the same way. Same thing here. Now, again, we want to review. An LLC, it really is what's called a legal structure. There is no tax type just by opening up an LLC. But not so fast, my friends. Just like our famous Lee Corso would say, when you have an LLC, you as the owner, you can actually choose how you are taxed and what you pay. That choice in the example here can save you tens of thousands of dollars. Now, you have inherently three tax options that I like to start with. There is a C Corp one, but we're not going to talk about that today. Right? Number one, when you first open up your LLC, if you're the only owner, you are taxed like a sole proprietor. You are taxed like a pauper or a normal person. Again, you still have legal protection and liability protection, but you don't have tax protection just by opening up an LLC. When that happens, you inherently pay your federal taxes, your state taxes, and your self-employment on all of your profits, which means all of your revenue less all of your business expenses. Now, there's another one that I didn't inherently talk about, but it's the same thing, is what's called a partnership. When you have an LLC that is owned by one or more person, you are taxed the same way as a sole proprietor. You pay the federal, state, and self-employment on all profits. However, if you choose to be taxed as an S corporation, your LLC, you can choose to be taxed as an S corporation, a small corporation. You still pay your federal and your state. However, you can actually reduce your self-employment tax. Now, here's the example that I like to talk about. And one thing we have to know is that the way that you pay taxes, you are taxed on your profit as a business owner. That means all of your income minus, or all of your business income minus all of your business expenses. As a sole proprietor or an LLC, you will pay roughly 15.3% on all of your profits after your state and federal taxes. State and federal taxes, you ain't getting out of that. Every single entity has to pay those too. However, the self-employment is where it gets a little dicey. When you are a sole prop, you have to pay that 15.3%, which is $22,950. However, if you are an S corporation, you can take some of that profit as what's called a distribution, which most of us have, or you can have a salary, or you have to have a salary, right? In this example of 150, you can pay the self-employment tax only on this $80,000 salary. The rest of it, this distribution or the profits, you only pay state and fed, right? So you can actually reduce some of that. In this example here, this person would actually save $10,000 per year legally, all because you have an LLC, you're using it correctly, and you just tell the IRS, hey, I don't need to pay as much self-employment tax. I want to pay less. Now, again, why it works is because the S Corp splits your income into two parts, the salary, which you do pay that tax on, and the distribution, which you don't. The IRS allows this, assuming it is reasonable. Now, what I mean by that is, let's say that I'm a CPA, or I am a CPA. I have an S corporation in my business. It makes $150,000. I have to declare what a salary is based on what the average CPA makes based on what I do. In this case, it's $80,000. That's how you do it. That's what is reasonable. Now, again, we will make future videos on what exactly is reasonable and how to determine that. But the key takeaway is here, do not let the IRS decide how you're taxed. Take your future into your own hands. Cut some of the taxes where you can. And again, the rich plan ahead. They make this election before tax time, not after. They are doing this well in advance. With all of our clients that work with us on a year-round basis, we are meeting with them at least twice a year to figure out what their tax bill is and then how to mitigate it. It's not the other way around. You can't decide to save taxes if you don't even know how much you owe. So the same thing here. The rich are prepared. Now, after we have all brought this home and you can see how an LLC will protect your assets from yourself and your business, but also it can potentially help you save on taxes. I want to go back to this example, right? This was a client that before working with us, they were set to owe $34,000, almost 35. However, after working with us, where we did all the work for them, they went to owing about $16,000. They saved $18,000 just by working with us. Now, again, if you're someone that actually wants us to do it for you and you pay for services where they actually get it done, because let's be honest, we're all coursed out. We've all had mentors and masterminds that really give you advice, but when push comes to shove, when the game's online, they don't do anything. We actually do this for you. We take a lot of the heavy lifting off of your plate. So again, If you want us to do stuff like this for you, with not only being an S Corp, but actually helping you save taxes legitimately and legally with confidence, make sure you click that link in the description of this video, apply to work with us, and we will get you on the board to tax savings. Now, again, my name is JT Pells, CPA. Look forward to seeing you in the next video, and most importantly, I'll see you on that call, and I'll talk to you guys soon.